The biggie, Adani Enterprises. Talk to us. What are those numbers looking like?
Very interesting set of numbers, and I'm very curious to get Amit's opinion on that. Now, revenue was down about 41% on a year-on-year basis, coming in at 22,517 crores in the September quarter versus 38,175 crores in the year-ago period. Net profit, on the other hand, almost halved. It was down about 50.5%. Coming in at 228 crore in the September quarter versus 461 crore in Q2 of FY23. EBITDA, on the other hand, that's where the curiosity takes place, because EBITDA, you see clearly revenue and profits have declined. EBITDA, on the other hand, the margins have expanded by 590 points. EBITDA has improved by 30 basis points. Amit, what's going on there? How do you make sense of these numbers, sir?
So see, Adani Enterprises is quite a complex business. There is a whole solar and wind manufacturing. There is airports business into it, and there is some sort of mining industries as well. Remember last year we had this Russia-Ukraine war, so prices for a lot of these raw materials was really up. The tourism sector was just coming along. But what we have seen is, if we are comparing year on year, then the numbers really look good. The EBITDA has sort of increased on almost 5,000 crores, more than 5,000 crores actually. The cash accruals have also increased. I think a lot of this has got to do with the base effect, and also given the new ventures which they are thriving now, which are becoming a little bit mature. The utility and the transport business is now almost a cash cow for them. That's why the increase in EBITDA and the cash accruals, as far as I can understand from the basic reading of the results. The airport business is actually doing very well. The passenger movement is up, air transport traffic movement is up, cargo is up. So a lot of these things have picked up really well over the last 1 year or so, and that's why the numbers have got a decent boost on a year-on-year basis.
Now, sir, as you mentioned, the business is quite complex. To give some clarity to the investors, is it high time, that it's, Adani Enterprises carves out some of its businesses as it did in 2017?
And consequently unlock more value in its stock?
Yeah, I think that is the plan. They've already, it's in the pipeline. They've already informed that they are looking to hive off airports business. They're looking to hive off even the new energy business, which is in this Adani Enterprises exclusively for the green hydrogen. So my sense is they will do it. Obviously they were a little bit hit by the Hindenburg report earlier in the year, so things have gone on the back burner as far as the value unlocking and demergers are concerned. They have to first look at the businesses and do more deleveraging, which they have done in the last 6 months. And my sense is once this state and general elections are done next year, we'll see them accelerating more, and we'll see some more subsidiaries of Adani Enterprises getting listed on the stock exchange.
Now, Adani Enterprises, even the stock movement was quite interesting. It was trading with gains of about 3.3% to 3.3%. Was the top gainer in the Nifty pack. Results come out, the stock dips and ends on a flattish note with a negative bias. In fact, it's down 0.15% in today's trade at around, and it closed at 2214 sort of levels. Even since the Hindenburg report came out, the stock is currently about 38 to 40% down from January 24 sort of prices. And it was, the stock was seen making a good bit of recovery in the last 6 months. In fact, if you look at the 6 months price chart, the stock is still up about 20%. But in the last 1 month, Krishna, it has corrected by about 10% or so. So clearly, weakness is setting in for Adani Enterprises.
Weakness setting in for Adani Enterprises. We will have to understand tomorrow morning how the stock opens for trade and after a day of results like this.